How to buy property without a bank. Welcome to the SubTo Podcast, the show where we break down creative real estate strategies that actually work. If you're trying to get into real estate investing but don't have perfect credit or a big down payment, you're in the right place. Before we dive in, let me tell you a quick story. A few years ago, I was sitting on the edge of my bed staring at a denied mortgage application. My credit was bruised, my savings were thin, and I thought I had hit a dead end. That is, until I stumbled across something called SubTo. Fast forward to today, I've closed several real estate deals without ever applying for a new mortgage. And in this podcast, I'll show you how to do the same. Today, we're talking about one of the most powerful and surprisingly misunderstood methods, SubTo investing. In this episode, I'll walk you through what SubTo actually means, how you can buy a house without a traditional loan, the key players involved in the deal, and why this strategy could be your fastest way into the market, especially if banks keep turning you down. So let's jump in. Let's start with the basics. What is a SubTo deal? Picture this. A homeowner still owes $150,000 on their mortgage, but they want out. Instead of you getting a new loan, you simply agree to take over their mortgage payments. The loan stays in their name, but the ownership gets transferred to you. That's SubTo. The main players in the deal are the seller, who keeps the mortgage in their name, you, the buyer, who takes over the property and payments, and the title company, which ensures the transaction is legally binding. Why use SubTo? No credit checks, no new mortgage, no bank approvals, and it's fast. It's perfect for people who want to build a portfolio but don't have W-2 income or a clean credit history. Let's talk strategy. Just like buying foreclosures has phases, pre-foreclosure, auction, and REO, SubTo has its own nuances. We're usually dealing with motivated sellers, people who are behind on payments or just need out. Maybe it's divorce, job loss, or they're relocating. Timing is everything. That's why understanding the seller's situation is key. You can find SubTo deals in places like direct mail campaigns, driving for dollars, networking with other investors, or even MLS listings where the seller is desperate and the home has been sitting for months. When I closed my first SubTo deal, it was through a seller who was 2 months behind on payments and moving out of state. They just wanted a clean exit. I took over their mortgage, made up the missed payments, and walked into instant equity. But here's the catch. Not every deal is a good deal. You still need to run the numbers. Just like with foreclosures, some SubTo deals look great on paper, but the margins don't make sense. So how do you lock in the deal? You negotiate the terms directly with the seller. What are you taking over? Will there be a down payment? Any back payments owed? What's your exit strategy? Flip, rent, or hold? Once you agree, the title company drafts the paperwork. You'll also want a solid purchase agreement and disclosures to protect both sides. And of course, always use an attorney or experienced closing agent. One tip from my personal experience, record every step of the conversation. Clarity now will save you thousands later. Final thoughts. SubTo is not a silver bullet, but it is one of the most powerful tools in creative real estate investing. It opens doors for people who otherwise couldn't get into the game. So, if banks are saying no, credit scores aren't high enough, or you're just tired of traditional financing, SubTo might be your best entry point. If this resonated with you, hit that subscribe button and share the podcast with someone who needs to hear this. In upcoming episodes, we'll talk about how to find these deals, how to talk to sellers, and how to scale a portfolio using little to none of your own money. Thanks for listening. See you in the next episode.